Hey Quanties, Quantify here and welcome back to the channel. Today we're diving deep into the SPY, the S&P 500 ETF, taking a look at the chart to identify some crucial levels and potential trade ideas. Then we'll shift gears and discuss three key news items that likely played a role in today's market movements, so grab your coffee and let's get into it. Looking at the daily chart for SPY, we can see it's had a bit of a pullback. We were in a pretty clear rising wedge pattern, which you can see highlighted, and as often happens, these patterns can break to the downside. It looks like we've just seen that happen, with today's candle pushing below the lower trend line of that wedge. For key levels to watch, on the upside, the recent highs around $596.60 will act as significant resistance. If we continue to see selling pressure, immediate support might be found around the top of that first gap area we've marked, roughly between $570 and $575. We actually saw price dip into this zone today. If that doesn't hold, the next major support level is down at $556.02. And if things get really bearish, there's another unfilled gap further down around the 520 to 525 zone, which could be a longer-term target. Our RSI, the Relative Strength Index, which was climbing, has started to roll over and is currently sitting around 56, suggesting that the recent bullish momentum is taking a breather. So, what does this mean for potential trades? Well, for a short trade, given the breakdown from the rising wedge, one could look for an entry if we see a retest of that broken lower trend line, perhaps around the 580-582 area, or even near current levels if conviction is high. Initial targets could be the 570 level to fill that upper gap, and then potentially the 556 support. A stop loss would be essential, perhaps placed just above the recent highs, say around $597, to protect against a sharp reversal. On the flip side, for a long trade, you'd want to see some confirmation of support holding. If that 570 gap support area proves strong, or if we see a decisive bounce off the 556 level, that could offer a long opportunity. Targets would then be back towards the $585-$590 range, and ultimately a retest of the 596 highs. Stops for a long position should be placed just below the confirmed support level you're trading off of. Now, let's talk about some of the headlines that might have contributed to today's price action. First up, we've seen a barrage of comments regarding EU trade. Former President Trump has apparently recommended a substantial 50% tariff on the European Union with a potential start date of June 1st. He also stated that discussions with the EU are going nowhere and that the EU has been hard to deal with on trade. This kind of rhetoric immediately sparks fears of a trade war, which can significantly dampen investor sentiment. Unsurprisingly, we saw shares of German car makers like BMW, Porsche, Mercedes, and Volkswagen fall sharply, between 3.3% and 4.5%, likely in direct anticipation of such tariffs hitting their exports hard. This broader EU trade tension is a major headwind. Second, and a big one for the U.S. markets, Trump has also reportedly threatened a 25% import tax on Apple unless iPhones are made in the US. Apple is a massive component of the S&P 500, so any specific threat to its business model, especially one involving tariffs on its flagship product, can send ripples across the entire market and weigh heavily on index ETFs like SPY. This creates significant uncertainty for one of the market's largest companies. And third, while there was some potentially offsetting news like Scott Bessent mentioning that several large deals are expected to be announced soon and that in-person negotiations with China will resume, and also reports of India and the US being near a trade deal breakthrough, the immediate and aggressive nature of the tariff threats on both the EU and a titan like Apple seems to have dominated market sentiment today. The prospect of escalating trade disputes and new tariffs tends to spook investors more than the promise of future deals, at least in the short term, leading to the kind of risk-off behavior we've seen today. So, that's the rundown, Quanties. Keep these levels and news items on your radar. As always, manage your risk carefully, and don't forget to do your own research. Let me know your thoughts on SPY and these headlines in the comments below. If you found this helpful, give it a thumbs up and subscribe for more market analysis. Until next time, trade smart.